Hey everyone, Jason here with Buyfi.ca. Today I thought I'd make a short video to explain how an asset that increases in value just 20% can actually generate a 100% return on your investment through leverage. That's one of the greatest powers about investing in real estate, so stay tuned. So first of all, if you're wondering why most of my videos involve me walking around in the forest, it's kind of mutually beneficial here. You get a better background than me standing in an office, and I get a little bit of exercise and fresh air. So anyhow, today I'm going to be talking a little bit about real estate being a hedge against inflation and why it's such a powerful tool. I talked previously in a video about how inflation happens, what it is, what the cause of it is, and some of its positive effects and some of its negative effects. So just a quick recap. We know that the bulk of inflation comes from the printing of money. So when the government prints large quantities of cash, like they have been during the pandemic, it devalues our current dollars that are already in circulation. So this isn't exactly how it works, but just a quick example is if you print 10% more money than what's currently in existence, you've devalued the dollar by 10%. So $100,000 now only has $90,000 of buying power. So that's why they call it the hidden tax, because it's a way that you've lost money. You've essentially paid that money to the government in the form of lost value, and you don't even know that you've paid it because your bank account still says that you have $100,000 in the bank, but really it's only $90,000 of buying power. So that's the cause of it and kind of how it works. There's a couple of very negative impacts of inflation, especially major inflation like what we've been seeing in the last couple of years. One is the cost of living for everyone increases. The rents go up, housing prices go up, groceries go up, gas goes up. Just overall your expenses increase drastically, 10%, 15%, maybe even 20%. And yet most people's wages haven't increased by the same percentage. So at the end of every month, you have a lot more expenses and no more income to pay for those expenses. So it really, really hurts people that are have those bills to pay and haven't seen the pay increase to match. Another thing that inflation really hurts is cash in the bank. Again, if you have $100,000 in the bank, you might only have $90,000 of buying power if we see 10% inflation. So you've lost value. If that money that's in the bank can't generate at least a high enough return to cover inflation, you're essentially going backwards, which isn't great. Some of the hedges against inflation are obviously buying assets, buying investments, or buying things that are going to increase in value at least as much as inflation. So real estate, obviously a good investment when we're seeing the price of things going up. Real estate is an asset that is obviously depended upon by the majority of people. So it's a great place to park money. Another great investment when it comes to inflation, believe it or not, is actually debt. And this can be a little bit more difficult to wrap your head around. Even I struggle a little bit to fully understand this. But essentially, if cash is what you don't really want to have during inflation because it's going to be losing value, it's losing 10% of its value, well, the opposite of cash is debt. So it would be nice to lose 10% of the value of your debt, essentially. I know it's kind of tricky to wrap your head around that, but another advantage of debt when it comes to inflation is if you can borrow at a low interest rate and invest in something that is matching inflation, you can actually reap the benefits. So if you can borrow at, say, 3% and invest it in an asset that's going to go up in value 10%, you're essentially going to make a 7% return on the bank's money. So that's a great way to leverage money to get ahead when there's inflation going on. I don't recommend everybody run out and take on as much debt as they can. There's good debt and there's bad debt. Going out and buying a bunch of liabilities, a bunch of boats, RVs, cars, things like that that are decreasing in value while you own them is not a great way to hedge inflation. It's actually a great way to put yourself in a really bad financial situation. But if you combine debt with real estate, this is where you can actually multiply your returns exponentially. So if you were to buy a $500,000 house and you're going to put 20% down, you're essentially going to leverage that property 5 to 1. So 80% of the price of that property is going to be paid by the bank in the form of a mortgage at $400,000. $100,000 is your money going into that asset. Now, we've seen real estate climb pretty drastically in price in the last couple of years. If that asset climbs in value another 20%, it's going to go from $500,000 to $600,000 in value. That's a $100,000 increase in value. Your initial investment was only $100,000. So you actually made a 100% return because you've leveraged your money 5 to 1. So you can see how real estate increasing in value to match inflation, or maybe even slightly higher than inflation, multiplied by the leverage that you're buying the property essentially with the majority of the fundings coming from the bank at a very low interest rate, and you've maximized your returns through the leverage. Now when I talk about real estate investments, I'm talking about properties that are rented, and the rents are covering the expenses of that property. So you're essentially going to be paying the rent's going to be covering the property tax, the insurance, the mortgage. Obviously your interest on the mortgage is all covered by the rental income. So you're borrowing money, even though you're not really responsible ultimately to pay back that money. The tenant is the one that's going to be paying it back. And yet you've now bought a much more valuable asset that's going to be increasing in value. So you can quickly turn a 20% increase in value of your asset into a 100% return on your money, plus obviously any cash flow and debt pay down. So that's one of my favorite things about investing in real estate, is the power of leverage. And even in a time of just normal inflation, 2% or 3%, if you multiply that return by 5 because it's a leveraged property, that's when you can still see a 10 or 15% return on your investment in a time where, yeah, the market might not be increasing in value that much. So yeah, hopefully that's a bit of an understanding about inflation and why real estate is a great hedge against it, and how you can actually profit from the inflation we're seeing. I really don't want anyone to struggle and be put out financially by the inflation that's going on. That's why I'm trying to help educate people so that they're understanding where their money's going and how they're at risk of losing some of the value in it. So that's inflation in a nutshell, and how real estate can be used as a hedge against inflation. Hopefully there was some value here, and it can help you understand how to avoid losses when it comes to major inflation. If you enjoyed this video, hit the thumbs up button below, and see you next time. Thanks.